Welcome to RP Data's update on housing market conditions for September 2012. Over the past 3 months, we've seen values across Australia's capital cities rise by 1.6%. That's the strongest capital gain we've seen since May 2010. The big question now, of course, is whether or not these improved conditions can be sustained as the market moves into the spring selling season. This month we're providing an overview based on the August results from the RP Data Rismark Home Value Index, as well as other key measures which provide an indication as to how the housing market conditions are evolving across the country. The month of August saw capital city dwelling values remain absolutely flat with a 0% change over the month. 4 out of 8 of the capital cities recorded a small capital gain, while the other 4 cities saw slight falls in values. The combined capital city aggregate index has remained in the black now for 3 consecutive months, a pretty firm indication that Australian housing market conditions are stabilising after values fell by just under 6% since they peaked back in October 2010. The last 3 months has seen every single capital city record a modest rise in values, apart from Adelaide, where dwelling values were down 2.2% over the quarter. The 1.6% rise of the combined capital cities aggregate was the strongest rolling quarterly result since May 2010. The strongest quarter-on-quarter movement was recorded in Darwin, where values were up by 5.2%, followed by Melbourne at 2.5%, then Sydney at 2.4%. The unit market has once again outperformed the detached housing market, recording a 0.2% rise in August compared to flat conditions for houses. Over the first 8 months of the year, unit values are up by 1.9% compared to a 0.9% fall for detached houses. Rental markets have continued to show some upwards movement, albeit at a relatively sedate pace at the combined capital city level. Rents are up 2.6% over the year, with the largest increases being found in Perth, where weekly rents are up 11.6% higher over the year, and Darwin, where rents are up by 10.1%. The only cities to record lower rents over the year were Hobart, where house and unit rents both fell, and Canberra, where house rents were down by 3%. Gross yields are now averaging 4.2% for houses and 4.8% for units across the combined capitals benchmark. Our vendor metrics are also continuing to point in the right direction or stabilise. The typical capital city house is selling within 60 days, which is the same number of days at the same time last year. Vendors are discounting their initial asking prices by 6.9% compared to 7.6% a year ago, and auction clearance rates are consistently above the 50% mark across the combined capital cities, which is an improvement on last year when clearance rates were generally between 45 and 50%. In fact, last week the weighted average clearance rate across the combined capitals reached just over 57%, the highest clearance rate recorded since October 2010. Focusing on Sydney now, so far this year, Sydney has recorded an improvement in dwelling values over 5 of the first 8 months of the year. Values are up by 1.9% over the year to date, which is a pretty strong result compared with the other major capitals. Sydney's unit market has driven the capital gains, rising by 3.6% over the year to date, compared with a 1.5% gain across the detached housing market. Sydney rental yields are tracking slightly above the capital city average at 4.3% and 4.9% for houses and units respectively. The Melbourne housing market has now recorded 3 months of consistent capital gains, with values moving upwards 2.5% over the 3 months ending August. The year-to-date figure remains in the red, however. Melbourne dwelling values are down by 2.6% over the first 8 months of the year. The recent resilience in the Melbourne market has surprised on the upside, coming out of such a strong growth phase in both 2007 and in 2009 and 2010. We're expecting a longer and deeper correction in Melbourne values. From the market peak, which was back in late 2010, Melbourne values are now down by 8.2%. Local rental markets have remained relatively flat though, with rents up just 1% over the past year. Rental yields have a long way to go before they get back to at least average levels, with the gross yield on a typical Melbourne house sitting at just 3.6% and units at 4.4%. Brisbane's housing market recovery remains tenuous, despite recording a quarterly lift in values of 0.6% over the 3 months to the end of August. Values have recorded a dip of 0.2% in August, following a 0.2% decline in July as well. Brisbane's apartment market has been faring much better than the detached housing market, with values down by 2.3% over the past year for units, compared to a 4.5% fall across detached house values. Since the market peaked back in late 2009, Brisbane values have fallen by 11.7%, the most significant correction of any capital city. It is reasonable to expect that the prospects for the Brisbane housing market should change soon. Rents are up by 2.3% over the year, yields are above average, and Brisbane prices are now 24% lower than Sydney's and about 12.8% lower than Melbourne's. Adelaide's the only capital city to record a decline in dwelling values over the 3 months ending August. The 1.4% increase in values over the month wasn't enough to drag Adelaide's quarterly growth rate into the black, with home values falling by 2.2% over the quarter. Rental markets remain relatively flat in Adelaide, with weekly rents up just 0.6% over the year. With the recent announcement from BHP that the Olympic Dam expansion has been put on hold, it's likely to cause a dent in local market confidence. Perth's housing market is continuing to evade a consistent recovery in home values. Despite an improvement in the 12-month trend, dwelling values have failed to consistently rise. Perth dwelling values were down 1.2% over the month of August, but they rose 0.2% over the quarter. Dwelling values are down just 0.6% over the past 12 months, and since the market peaked, values are 8.8% lower. Perth rents are racing upwards though. Over the last year, rents increased by 11.6%. The surging rents have pushed Perth rental yields to a position which is now above the combined capital's average. The trend for Hobart values appears to be showing some subtle improvements, with values up 1% over the 3 months to August, pushed higher by the more volatile unit index. The market remains 10.4% lower since values peaked. Hobart rents have shown a drop over the past year, with house rents down by 2.5% and unit rents falling by 1.8%. The number of house and unit sales across Hobart was estimated to be about 39% below the 5-year average, demonstrating the lack of demand currently being experienced in the southern capital. Darwin's housing market recorded a fall in values over the month of August, which is probably more statistical noise than anything else. Over the quarter, values have increased by 5.2%, the largest rise of any capital city, and over the year to date, Darwin values have increased by 8.4%. Despite the solid improvements so far this year, Darwin values remain 11.1% lower than their peak, highlighting the scale of the correction Darwin's market experienced in 2010 and in 2011. Darwin rents are also rising rapidly, up by 10.1% over the past year. Canberra's housing market recorded a further capital gain over August, with values up 1.2% over the month and 2.8% over the quarter. So far this year, Canberra values have increased by 1.4%. There may be some confidence issues hitting the Canberra market, with some speculation that there will be further job cuts from the federal government that could affect local housing demand. House rents fell by 3% over the year to August, and unit rents rose by 1%, suggesting that rental conditions are starting to ease. The next big challenge for this housing market is going to be the performance over the spring season. We generally see new listing numbers start to ramp up in spring. Currently, we're seeing the total number of properties advertised for sale tracking at about the same level as they were at the same time last year. That's a solid reduction in stock compared to the number of listings in late 2011. New listings are being added to the marketplace at a rate which is 12.5% slower than the same time last year. However, we do expect the rate of new listings being added to the market to increase over the coming weeks as the spring selling season moves into full swing. The improved performance has come in winter, a time when the market is generally seasonally slower. As the weather warms up, it's logical to expect buyers will become more active. Whether this activity converts to more sales and some upwards pressure on prices will be the true test of a market recovery. Lower interest rates would almost certainly provide some further stimulus to market conditions. However, the certainty of a further rate cut has faded somewhat since earlier this year. Currently, the ASX interest rate futures market is predicting the cash rate will fall by at least 25 basis points before the end of the year. Data flows remain quite mixed. However, consumer confidence hasn't rebounded by much, and growth in retail sales remains very low, as do dwelling approvals. The Consumer Price Index was last recorded at 1.2%, suggesting the RBA has some room to move if they think the cash rate needs to move lower. Last month we received a fantastic question from Rod, who owns an investment house in Darwin. Rod has owned his home since 2005 and is wondering how much higher prices can go at the top end. In many ways, investing in Darwin has many of the hallmarks of investing in a mining town. The economy is largely dependent on the resources sector, a factor that has propelled dwelling values upwards at the average annual rate of 10.1% over the past decade. At the same time, rents have more than kept pace with value growth, a phenomenon that's quite rare when values are rising rapidly. Typically, rental markets simply don't move that fast. The result has been a spectacular rate of capital gain, together with high rental returns. How much longer can the Darwin market run? Well, the market suffered a severe correction between September 2010 and January 2012. During this time, Darwin values fell by about 20%. The sharp fall is a clear representation of how fickle the market can be. Population growth into the region remains strong, there's some very large infrastructure projects underway, and there's plenty of exploration and drilling for natural gas. Additionally, there's some added stability from the large military and government presence that provides some economic diversity. Prices in Darwin are now almost on par with Sydney, so it's likely there is soon going to be some distinct affordability obstacles that may start to slow the market conditions over the medium to long term. I know this isn't a direct answer to your question. No one really knows how long the market in Darwin will run for. However, you've probably made some pretty spectacular capital gains since purchasing your property, so it's likely you're well in front of the 8 ball. As always, thanks for your interest in the RP Data Housing Market Update. You can keep track of market conditions from day to day and week to week by following the RP Data RISMark Daily Home Value Index at www.rpdata.com. Thank you.